We just saw the first sign of what a lot of investors have been fearing for the last 3, 6, and 12 months. We had Google report, they missed earnings, the stock's down 7%. We had Microsoft report and their guidance came in light for the future quarters, and that stock's down something like 8%. So today we're gonna go through Google's report. Everything just changed. It has completely changed what I'm thinking about doing next with my portfolio. I'm gonna share my portfolio and what my plans are. And I'm gonna tell you everything you need to know if you own Google stock or if you're thinking about owning it. Google and Microsoft essentially are the reason the NASDAQ is down 1.76%. The S&P 500 is only down 0.7%, and the Dow is actually up slightly, which is interesting to me. Before we get into Google, I want to cover my own portfolio. I share it transparently every day here on YouTube. I'm at $105,555, only down $3,000 on the day, or down 2.7%. After the Google and Microsoft reports, and because of the fact that I own nothing but tech stocks, I own Snowflake, Rocket Lab, CrowdStrike, Datadog, Meta, GitLab, Cloudflare, companies like that, I actually expected my portfolio to be down a lot more. And here's the problem with Google's report. So they said the stock dips 5%, but you can see over here it's actually down 8%. And here's one of the keys to their missed expectations that a lot of people aren't talking about. A lot of this comes from currency challenges. Google gets a lot of revenue in currencies that are not the US dollar, and so those get converted to the US dollar. The US dollar has been really strong. Companies that are exposed to other currencies that earn revenue and income in other currencies are getting a headwind, or they're facing challenges because those foreign currencies are not valued as highly as they were previously compared to the dollar. Those tend to be temporary and tend to just work themselves out over time. So that's not something to think is going to happen, forever for Google. Revenues grew 6% to 69 billion, which is short of that 70 billion estimate, or 8.5% year over year. But revenue would have grown 11% in constant currency, so they would have actually come in above revenue expectations. Operating income and margins fell as well to 17.14 from 21 and to 25 to 32% respectively for margins. Okay, so kind of the big shocker was actually YouTube ad revenue, which fell by 2% to 7.1 billion, which was about $400 million shy of analyst forecasts. So that was something that analysts did not like. And this also has people scared, but I think it's smart of Google to do, and it was to be expected. The company is going to slow down its hiring in the fourth quarter, and it would be significantly lower than in the third quarter. Okay, that's what has everyone talking about, this is a clear indication of a recession and hiring issues and employment issues to come. With all of this, right, Google's down 7.57%. What I want to do is show long-term perspective. And the way I'm going to do that is with this dollar cost averaging calculator. And what we set up here is pretty simple. We used the ticker GOOGL, periodic investment of $500 every month, starting back in 2014 through October 26. And what this will show you is just what an investor would have received over time if they had been investing $500 a month in Google. Maybe you don't have that. Maybe you have $10 to invest every month, 20, 50, 100, more than 500, whatever. This is just an example, right? And it's to show you that even with this short-term up and down, and Google down, incredibly from its high, it's down, 20%, 25% now from its highs. Over time, starting back in 2014 and committing $500 a month or whatever amount to a month to this stock, you would have put in $50,000 and you'd have gains of $52,900 for a total value of $100,000. So that's 100% total gain on your investment, dollar cost averaging into this stock from 2014 to 2022, even after this crazy, horrific drop. Okay, that is just something to remember about long-term perspective when we look at all these short-term movements in stock prices. And the stock is actually up 255% over that time, but because you didn't put everything in at the very beginning and you dollar cost averaged in over time, you don't get that entire 255% gain because you were spreading out your investment. If you would have started with, $1,000 or $5,000 or $10,000, then that initial investment in 2014 would be up 255% from then until now. I wasn't considering buying Google, and I am now. I don't think everything is as bad with Google as people are thinking it is. I'm not going to say I'm going to go all in, but I'm strongly considering building a position over time because I think this is an incredible buying opportunity for a few reasons. First, Google is getting smarter about cutting costs and spending money in a more disciplined fashion. That's actually good. They are significantly investing in making improvements in search using AI and then new ways to monetize YouTube Shorts, which will support the creator ecosystem. They are realigning resources to invest in the biggest growth opportunities. Again, that's about cutting costs. This is where I think a huge opportunity lies. They're going to introduce revenue sharing from Shorts early next year, which makes YouTube the only platform where creators can monetize their content across short, long, and live formats at scale. And Google Cloud, which is a huge, important part of Google's business moving forward, is doing just fine, right? And that's why a lot of the companies I own, the cloud and SaaS style companies, aren't getting crushed, is because cloud revenue from both Microsoft and Google really wasn't that bad. And actually, there was some strength in Google's case. They saw continued momentum with Q3 revenue of $6.9 billion. With the Google Cloud Platform's revenue growth rate above the aggregate, right? Where does that leave us with the price of Google? Is it a buy? Is it undervalued? Is it overvalued? Well, Morningstar came out. They said Alphabet misses expectations as macroeconomic uncertainty hits ad revenue. Shares are undervalued. They did take the fair value down from like 166 or 168 to 160, which means they think it's currently at a 38% discount to fair value. They did call out YouTube Shorts. It's already reached 1.5 billion monthly active viewers, which reduces fears that TikTok is hurting the business. Basically, they think that expectations of an economic downturn among advertisers is the reason for this slowdown, which means eventually it'll get better. It's not like they're getting disrupted by, TikTok or Apple or whatever. Their business is just fine. It's just a tough time. And then they also called out the cloud segment that was up. The growth was 37.6% as demand for migration to cloud remains a high priority for firms looking for cost savings, right? So they called out advertising troubles, strength in the cloud, but Google is a very strong business over the long term. And so now if we just look at this chart, which shows Google's stock price over time, we can see that it's currently trading at a blended price to earnings ratio of around 20. It's actually down, 7% from here. So maybe around 19 or so. And it really hasn't traded under a blended price to earnings of 19 or 20 consistently since back in 2012, okay? And so that gives us a bit of historical context. Now let's talk about what the price might do, in my opinion, moving forward and how I'm thinking about the stock. We've put in some longer term growth estimates on average for earnings over the next, 3 to 5 years, right? And they have it coming in around 9% on average over that time period. So if we go out to 2024 and we take it down, this is a range I think the stock will likely trade around. If we take it down to a blended PE of 15 in 2024, then you've got a total return of 4% for annualized 2%. That's not a great return, but there's not a ton of downside risk there, right? In terms of upside, what do I think the best case scenario is for the stock over the next few years? Well, I think it could trade up to a PE of around 19.5 in 2024. And if it does, you have a 35% total return for almost 15% annualized. I'm not going to tell you exactly the price I think it's going to trade at. Nobody knows that, and investing is about probabilities. So I think the probability of a major risk to an investment in Google right now and permanently losing a lot of money, I think is pretty low, but it's possible, of course. And I think the upside has nice potential, especially when you think about the strength of the company that you would be owning. I'm not a financial advisor, so make your own decisions, but let me know if you own the stock and what you think about this report in the comments. And if this was helpful, like the video, it helps people find it, and subscribe to the channel so you never miss an update.